Yo, what's up, guys? Oh, how's it going? I'm Juka, and welcome back to another video. Today, guys, we're going to do the trade recap. I made $177 today. Day trading the S&P 500. So let's go to the 4-hour. So basically, we have news today. So I didn't want to trade. Not news. We had wire news yesterday, so I did not want to trade today. However, if we found a setup, I was willing to trade very low, not only very low risk, but also with not very low risk, but also with the 5-minute strategy. So with more confluences than do 1 minute alone, So basically, for those who don't know, I have two strategies. It's basically the same strategy, So breakup structure. So price hits key level, 1 hour, fair value gap, whatever. Key level imbalances and liquidity. So 1 hour high, 1 hour low, 4 hour high, 4 hour low, 1 hour fair value gap, or 1 hour, 4 hour fair value gap. Those are the key levels that I'm marking to see where price wants to go. Then from then we want to see 5-minute breakup structure or 5-minute reversal gap or a 5-minute SMT or an SMT, of other time frames. But that's what we want to see. Then we want to see a continuation conflict, so price retrace into order block, breaker block, fair value gap, equilibrium. And then we go to only after we go to the 1 minute, waiting for a breakup structure, reversal gap, and then on the beach. I also have the 1 minute strategy, which is exactly the same thing. So we get so we get key level hit, then we have you can take trades from the low time frame liquidity instead of being key level liquidity. So you can sweep out low time frame liquidity up towards high time frame draws, or high time frame draws up to low time frame liquidity. And this is a more aggressive strategy that I've been using the last weeks, and even this week I used it. But it's on the 1 minute, so instead of waiting for 5 minutes breakup structure and inverse fair value gap, you wait for 1 minute inverse fair value gap or breakup structure. You can also wait for the 79% extension of Fibonacci getting disrespected, like 79 value getting disrespected, whatever. It's it's simple, but you guys don't need to know that. Then you're ready for a continuation confluence, either a order block, breakup block, equilibrium, fair value gap on the 1 minute, and then you're waiting for a kind of reaction in the direction, enter that, stop loss or trade idea is wrong, and take profit on other key levels or low time frame resistance liquidity, low resistance liquidity, whatever. This trade, if I was willing to take it, it will be on the 5 minutes, so with 5-minute confluences. So what do we have? Both on the S&P and on Nasdaq. So market opens, we are feeling this 4-hour fair value gap. Not only that, go to 1 hour, we are feeling these 2 hours, this 1 hour and 1 hour fair value gaps. So we go to the 1 minute, we go to the 5 minutes because I'm going to trade on 5 minutes today. And this is a key level, so it's an imbalance, so 1 hour fair value gap or 4 hour fair value gap. That's an imbalance, that's a key level where we want to trade from, where we want to take a trade from. What are we getting after? Inverse fair value gap or breakup structure on the 5 minute? What do you get? Inverse fair value gap right here, boom. Market opens, we get inverse fair value gap. Then we are not willing to trade until 10 because we get news at 10. We're at 10, it's right here, boom. So it's okay, we wait. But not only that, we need more confluences. So we get inverse fair value gap, then we get a retracement into, guess what? Equilibrium. Up to these highs, up to these lows, we get into 5-minute equilibrium. So we get our confirmation confluence and our continuation confluence. Now we need a 1 minute breakup structure. We go to 1 minute. And this was really just a clear setup, today. So we got the breakup structure. So we got the retracement right here. Price goes up. We want to see a breakup structure and inverse fair value gap. We don't get any of them. So we are waiting. We don't get breakup structure right here because this is low, we are monitoring. We don't get breakup structure right here. This is low, we are monitoring. We don't get breakup structure right here. Then we go to this low, and if we want to see inverse fair value gap, we have this fair value gap, which we are waiting to get invalidated. It doesn't here, so we need to wait. It gets here the same time as breakup structure, 1 minute breakup structure. So we get our confirmation confluence on 5 minutes. We get our continuation confluence on 5 minutes. Then we got the confirmation confluence again on the 1 minute. Enter on the beach. Stop loss or trading idea is wrong. I put it a little bit below here. So I put it a little bit below this fair value gap, so I put it around here. The safest way would be on top of this candle, but then my stop loss would have been way too big, so I put it a little bit tighter, which was very risky because I almost got stopped out. But it's okay, I didn't. So, price went down initially, then go up a little bit, then, one thing you could have entered off was, the reaction of this fair value gap, 1 minute fair value gap. So, because price did such a big move down, what you can wait is for a price go up, and then enter on a reaction out of it, which will be probably more ideal than the trade that I took. But it's okay, you know. So stop loss around here. Take profit 1 on these 5-minute lows. I can show you guys 1 second. These 5-minute lows, take profit 2 all the way up to these low resistance, low time frame liquidity, because I really wanted, you know, these lows, it's just low time frame liquidity stacked up. I really wanted these lows to get taken out at least, not these because they are a little bit too far away, and they have already been swept, you know. If I can mark them out, they've been swept, so, you know, it's not, the only low is right here, so I wanted this low to get a minimum, to get it, but yeah, you know, price moves lower, we hit our first target, then we took partials, put stop loss at break even. We got break even right here. So yeah, not, you know, the best trade ever, but it was like a 1-to-1 risk to reward ratio or something. Yeah, close to 1-to-1. I probably closed it here because, you know, price moved lower and lower, and I closed it around there. So it was a 1-to-1 risk to reward ratio. Not too bad, to be honest. Very low risk. Closed the majority of my position here, then price moved to break even, and yeah, I closed majority here. You know, normally I would keep it up, but because we had news, because I wasn't really willing to trade and everything, I just put the manage my position this way, and yeah, it is what it is. You know, a very good trade. You know, not too bad. Not a very good trade, but, you know, a very good setup on 1 minute. And yeah, that's basically it. That was the trade today. You know, buyers was bearish, took a small trade, took 1 partials, you know, in a day that I didn't really want to trade, took a trade, and it was a good trade. So, you know, yeah, it is what it is, you know. Looking forward for next week. You know, today we have the news at 10, as I can show you guys here. We have news at 10. Hopefully next week it will be a much better week. I'll see right here if next week is a better week. This isn't even next week, bro. What the hell am I doing? Okay, this just put everything right here. Okay, so Monday no news, nice. Tuesday I have exam, we have news. Okay, pre-market, but I have exam. I don't know what time I have the exam, but we have news. I don't know if I have exam before or later, whatever. USD news. Wednesday, damn, we have a lot of news at 7 p.m. is like, I don't know, 5. I don't know what time it is in the US, but yeah, we got a lot of news and pre-market news as well. Thursday I have my last I don't. Damn, this is a lot of news, but no USD news. We are good to trade. Bank holiday. Okay, we are not trading. Is this the Freedom Day? Probably yes. I'm not sure. Yeah. And then on Friday is my last exam. No news, so it's a good day. So yeah, we're not trading on Thursday for sure because of bank holiday in the US. Wednesday, a lot of news, but we'll see if we get a setup, you know. And Thursday, we'll see. I don't know what time I have the exam, but for sure I'll do the recap for you guys and everything. So yeah, I hope you guys enjoyed the video. You know, if you did, make sure to like, leave a comment, and share to your friends as well. Comment what was your bias for the day and everything, you know. And yeah, you know, this is basically it. You know, this was a trade today, made me $177. I'm positive on the week, you know, which was a good first week, you know, 3 days of trading. Yesterday again, you know, just could have taken a better trade, you know. I just, yeah, did a small mistake on my execution and could have won a trade initially. Took partials and then got out of the market, but I didn't, you know. I took a bad trade because it wasn't off a key level. It was on the S&P on a key level and not on the Nasdaq, and I thought it was, but the key level that I thought it was, you know, I can show you guys maybe. Yesterday, highs on the S&P, they weren't swept pre-market, you know. Like, I got to 5 minutes, and these early highs got swept pre-market, really? Okay, so I don't know what I was seeing, bro. I don't know what I was seeing. I took the trade on Nasdaq. It was out of these early highs. Okay, so now it's better. Okay, so it's these early highs. I remember because I was marking an S&T out of it, you know. So macro opens, we sweep them out, and as you guys remember, I took a trade on Nasdaq. I took a trade on Nasdaq out of it, you know, and right here, we even if I went to the 1 minute, we get a reversal gap right here, boom, but we don't get a continuation of this. We don't get a break of structure, reversal gap. We don't get anything. Price keeps moving higher. While on Nasdaq, I can mark it out for you again. Early highs, right here, boom. These early highs, fuck, bro. These early highs and these early highs, you know, again, they stacked up together. But as you can see, they were both swept pre-market. It doesn't look like it, but it was, you know, swept pre-market. I can zoom it out for you guys to see. It was swept out pre-market. So these early highs have already been swept. and I took the trade out of the hourly highs getting swept, but they weren't hourly highs because they have already been swept. So yeah, my mistake from my side, that was really, I took the first trade when I shouldn't. And then the second trade, which should have been right here, on the 1 hour fair value gap reaction or something, or the imbalance itself, because it's not even a fair value gap, would have been a banger. That would have been the trade to take. Not because, of course we got lucky with the war news, but even before, it would have been a good setup to take, and very good continuation and everything. So, it is what it is. Bias was correct. Those equal high hourly lows which we marked down right here were both swept with these big ass news. I don't know where even they are. They are right here. These equal lows, boom, swept. So yeah, again, no good trade today. Good execution, in a day where, I shouldn't even trade. It's not like I shouldn't have traded, but, I didn't really want to trade, and I took a trade because we got a good setup. So, good day for you, a good day today, yeah, looking forward to next week, and it is what it is. Probably doing a video on the weekend about psychology or something, not sure. Comment down below if you want to see that, and yeah, that's really basically it, and yeah, see you guys on the next one. Bye bye.